So the Mercedes-Benz 2025 annual report, it tells a really fascinating story. It's all about a 140-year-old giant navigating a perfect storm of global headwinds, all while trying to engineer its next great era. So let's dive in and break down exactly how they plan to pull this off.
You know, for Mercedes-Benz, everything really starts with legacy. As their CEO, Ola Kelly puts it, this isn't just history for them, it's a mandate. For 140 years, that star has symbolized innovation and luxury. But here's the real question today, right? In a world that's changing so radically, is that legacy a shield? Or is it an anchor holding them back?
Because the future, well, it looks completely different. Mercedes is pivoting and pivoting hard, creating a whole new design language for what they call the digital and electric age. This is not just a facelift. We're talking about a fundamental reinvention. And as you're about to see, that transition, well, it hasn't exactly been a smooth ride.
And boom, that brings us right to the core paradox of this entire report. Despite its incredibly powerful brand, Mercedes-Benz saw its EBIT, and just a refresher, that's earnings before interest and taxes, a really key measure of profitability, plummet by a staggering 57% year-over-year. What on earth happened?
Okay, so to really get our heads around that massive drop, we've got to dig into the financials. And 2025 was, to put it mildly, a year of some serious headwinds for the company.
And when you look at the numbers, the downturn was pretty much across the board. Group revenue, down 9% to just under $150 billion. EBIT, like we just saw, down a massive 57%. Net profit, nearly cut in half. And, crucially, industrial free cash flow, the actual cash they generate from making and selling cars, dropped 41%. Look, this wasn't just a small dip. We're talking about a serious financial hit here.
So, what went wrong? Well, the report points to three main culprits. First, you had volatile global tariffs, which just added a ton of uncertainty and cost. Then you have China, a massive market for them, where competition from local EV players like NIO and XPeng just got incredibly fierce. And if that wasn't enough, they also had a huge one-time hit of $1.8 billion for restructuring. So, how is Mercedes fighting back?
Well, their response is this classic two-pronged strategy. It's part defense and part offense. Think of it like this. They're shoring up their main fortress, while at the same time launching a bold attack on totally new territory.
Okay, so on one side you've got what they're calling the luxury fortress. This is all about doubling down on what Mercedes does best, right? Ultra-premium, high-margin cars where that brand name is just an almost unbeatable advantage. And then on the other side, you've got the tech offensive. And this is a full-on assault on the new automotive battleground, software and EVs. Let's dig into that fortress part first. Okay, and this is where the strategy gets really interesting, because even as their overall sales were dropping, their most profitable cars, that segment held strong. I mean, get this, sales of the iconic, super high-margin G-Class actually grew by 14%. And they're doubling down, with new S-Class and Maybach models aimed squarely at that ultra-exclusive $500,000+ market. That right there, that's their defensive moat.
All right, now for the offense. Mercedes is taking the fight straight to their tech-focused rivals. They're tackling range anxiety, you know, that fear of running out of juice, head-on with a new C-Class EV that's promising an 800-kilometer range. The all-new CLA, which is built on an electric-first platform, kicks off a massive product blitz. We're talking more than 40 new models by the end of 2027. And at the very heart of all of it is one key piece of technology.
And at the very heart of that whole tech offensive is one thing: MB.OS. This is their own in-house operating system, and it is, without a doubt, what Mercedes sees as the digital engine for its entire future.
Now, to really understand why MB.OS is such a big deal, you have to get your head around this concept of the software-defined vehicle, or SDV. Think about it this way. It's a car where the features and functions aren't just locked in by the hardware when it leaves the factory. Instead, almost everything is controlled by software. And that means the car can be updated, upgraded, and even monetized over its entire lifetime.
And here we see that strategy in action. This, the all-new CLA. It's not just another new car. It is the very first vehicle to ship with MB.OS. That makes it the company's first true software-defined vehicle out there on the road.
And they have an incredibly clear business plan for how this is all going to work. Step 1, you launch it with the new CLA. Step 2, you start integrating what they call digital extras. So think over-the-air software updates or even subscriptions for really cool advanced features. And step 3, and this is the big one, you drive recurring revenue long after that car has been sold. This completely changes their business model. But does this stuff actually work? Well, the numbers might just surprise you.
Get this. In 2025, Mercedes reported $19.4 times billion in a category called Other Revenue. And guess what's in there? Digital services and subscriptions. So this isn't some far-off future plan. This is already a massive, multi-billion-dollar business for them right now. Now, they're not trying to build this entire digital future all by themselves. They've actually put together a kind of dream team of tech giants. You've got Google handling the integrated navigation and real-time traffic. Microsoft is bringing Teams video conferencing right into the car. The AI for the MB.OS virtual assistant, that's powered by large language models from ByteDance. And they even have a key partnership with Momenta to tailor advanced driver assistance systems specifically for the super complex Chinese market.
Okay, so let's recap. The financials for 2025, pretty grim. But the strategy going forward, it's really clear and it's definitely ambitious. So, what do the independent experts make of all this? Well, that brings us to the analyst's verdict.
This analysis is provided by HDIN Research, and their conclusion is really telling. They say that despite all this short-term pressure, Mercedes-Benz has shown steady strategic resolve. In other words, the company isn't panicking. They're sticking to their guns on luxury pricing, and they're hitting the accelerator on that software strategy, which in the analyst's view is absolutely the right long-term move.
And it seems Mercedes management agrees, because their own official guidance for 2026, well, it's the ultimate test of this whole strategy. They're telling the market to expect revenue to be about the same as last year, but, and this is the key part, they are forecasting EBIT to be significantly above this year's level. Basically, they're signaling that those big restructuring costs are behind them and that this new strategy is about to start delivering real results. And all of this brings us right back to that huge, central question. Mercedes-Benz is making a massive bet here. They're betting that by fortifying their incredible luxury heritage, while at the same time launching an all-out tech offensive, they can successfully navigate this crazy new era of disruption. But is this bold, two-pronged strategy really enough to secure another 140 years at the top of the automotive world? You know what? Only time will tell.